We're back and I'm reviewing 2 more traders here at Atmos, and in today's video I've got a great example of never giving up even if you get very close to that drawdown limit, and another example of someone who's currently 2,000 up on their funded account, and I can give you an insight into their strategy. So let's get into it. Okay, so this first example, I wanted to show you this trader who started out by opening a 5,000 2-step assessment. So this is phase 1. Failed the phase, but more interestingly, I was looking through his trades, 65 trades, 39 winners, 26 losers, but still breached. But what did he breach? He breached the daily loss limit. He was actually in profit on the account, but breached the daily loss limit. Always keep an eye on that, people. So you can only lose a certain amount of money. I can show you here on the dashboard. Your daily loss can't exceed the amount that's shown here. So you can still be in profit on a prop firm, but you can fail the account if you don't stick to the rules. Now, at Atmos, the rules are clearly laid out. You can see your profitable trading days, your minimum trading days, your profit target you need to hit, your daily loss is here, and your maximum total loss. Just make sure you don't fall into that same trap. Now, I wanted to show you, I think, what this guy is using in terms of his strategy. He's placing really, really small lot sizes. When I go onto another account, let's go on to his 25,000, which again was breached. I actually got really close to the daily loss limit again, which is something that maybe this trader needs to learn. You don't want to keep getting close to that 5% daily loss limit. Okay, so lot sizes on the trade, 0.1, 0.3, 0.5, and a lot of trades, which suggests to me straight away this person is potentially a swing trader. Normally when people swing trade, they have fairly wide stop losses and fairly wide take profits, because that's the nature of swing trading. It allows you to place a smaller lot size. It's the trading that I prefer, if I'm being honest, because you have typically more of a stable equity curve. Like, for example, here, I know this person lost money, but the way his equity curve dropped, it sounds strange, but it's fairly healthy. It's not just one straight drop, which basically means he went, double down, triple down, max lot size on a trade and lost it all in one trade. There's a good amount of data there for him to actually look at his trades and learn from them. So he failed that. And then when I went into the next one where he opened up another 25,000 phase 1, but passed it, you can see that pretty much is like the reverse of that equity curve we just saw previously. So he's a swing trader. Now, when I look at some of the positions that he opens, he holds like between 9 minutes, but then in some cases it's like 8 hours, 11 hours, 12 hours, right? The trades where he made the most amount of money were these 12-hour trades, these 8-hour trades, these like longer holdings. Not really a swing, more intraday. But the ones where he lost money were the ones where potentially held for a very short amount of time. Now, what this says to me is this person does a strategy where places a swing trade with a very super tight stop loss and tries to get in on the runner, whether it's down or up. Say, for example, you bought a market, your stop loss is like 5 pips, but you're targeting a massive amount. And when you get into profit, you move your stop loss to entry straight away and you try to basically try and catch on to the trend. So what ends up happening there is you have a lot of trades and you'll probably place multiple trades in a short space of time where you keep getting stopped out for that small stop loss. But the one trade that does run in your favor, you can be super aggressive, move that stop loss to entry and let the thing run. And that's pretty much what this person has done throughout all of his trading. So it's mixed results. Obviously, sometimes it worked, sometimes it didn't. And then when I go up to phase 2, again, was in a bit of drawdown, 14 trades won, 10 trades lost. The lot sizes did increase a little bit here when he moved into stage 2, which says to me that he was in a bit of a rush to complete it. Okay, it worked out for him this time. I've seen plenty of examples where it doesn't work. So when I look at these, the balance, this purple line, when it goes up really steeply, that suggests it obviously means that they've made a big amount of profit in a short space of time, but that wasn't what it looked like on his other accounts, on his other phases, which says to me that maybe he was rushing a little bit. And my tip for you would be to stick to what worked previously. There is no time limit on the phase, so trying to pass it in a quicker space of time, more often than not, will end up in you losing it rather than winning it. But this person is an example of where it worked out for him, if that's what he was doing. And then when I go onto the live account, currently $2,000 in profit, fantastic. A lot more of a stable equity curve. Lot sizes 0.5, 0.1. You can see that a lot more calm in his trades, sticking to what worked in the earlier phases. And again, holding trades between that sort of 3-4 hour mark. I didn't see too many examples here though of trades where he was holding it for like 5 minutes and he was stopped out, which suggests to me there might have been a change of strategy here, which rings alarm bells to me, because I think something worked previously, you don't need to change it again. But again, I don't know exactly what strategies trader's using or whether he's using multiple strategies. All we know is that it works. He's a forex trader trader, and he's made some good profits and places a lot of trades on the same market in a short space of time, which suggests to me that he's really trying to get that pinpoint entry, and when he gets it, he holds on to it. And in this example, this is a lesson of things can go wrong at the start and you get put into some drawdown, but just to keep executing your plan and keep your head in times of drawdown. Drawdown is a very, very normal phase to be in. So this person, 2000 two-step assessment phase 1, passed. Look down at his trades, 25 trades placed, 12 trades won, 13 trades lost. Fairly healthy win rate, around 50-50. What I noticed more than anything was the first 2 weeks of the challenge, he was in a drawdown, which for a lot of people is hard to take in prop firms, of course, and really in any trading account, but particularly in prop firms when you know you need to hit that profit target. To be in drawdown for 2 weeks is quite tough, but then recovered really, really nicely. His highest performing instrument, AED USD, lowest performing instrument was NZD USD. So typically, as you can see across all of these trades, pretty much just trades USD majors, which again, no problem with that. If you're going to pick a Forex pair, for me, I enjoy using the dollar majors as well. They tend to be more predictable. Some of the trades held on to for quite a long period of time, so there is no correlation there with how long he's holding on to trades. But as you can see, recovered really, really nicely. So reversed about 2 weeks of drawdown in about a week and ended up passing the challenge. A good example really of even when things go wrong at the start is to keep your head, keep executing your plan. As long as you've tested it and you know it's got an edge, you're going to be just fine. And this person is currently on his phase 2 at the moment. Again, a bit similar really, in a bit of drawdown at the moment, has been in drawdown for about a month and hasn't placed a trade for 10 days. Maybe doesn't like the idea of the volatility that we're seeing at the moment, potentially. Nothing wrong with that if you choose to sit out. The thing that concerns me here is 9 trades won and 30 trades lost, and he's changed his pair to USD MEX. Still a USD pair, but typically you see some fairly wide spreads on that pair. And he's changed his lot size as well. So this person has decided, even though past phase 1, to change his strategy in phase 2. And my advice would be not to do that unless there's something that you've tested which you know is better. If something's working, just stick to it. Don't change what isn't broken. So don't try and fix what isn't broken. So that would be my advice there, but this person is still active on this phase. So thank you for watching. And if you're feeling confident about your strategy and your edge, come and give an Atmos challenge a go over at atmosfunded.com, and stay tuned for more breakdowns just like this.